Hello everyone, and welcome to today's in-depth exploration of one of the most polarizing figures in modern politics, Donald Trump, and his potential impact on the world of cryptocurrency. By the end of this video, I hope you'll have a clearer sense of how Trump's leadership style, policy decisions, and overall influence might continue to shape the crypto market. It's a topic filled with passion on all sides, so buckle up as we delve into the complexities and try to make sense of where we stand as forward-thinking investors. Let's start with the broader picture. The crypto market has always been synonymous with rapid ups and downs. Prices can skyrocket or crash overnight, influenced by everything from new regulatory announcements to a single social media post by a highly visible public figure. And when we talk about Donald Trump, we're talking about a leader who made headlines on a daily basis, often by speaking off the cuff, sending out attention-grabbing tweets, and shaking up the traditional flow of political discourse. One of the hallmarks of Trump's time in office was a strong America First attitude, which manifested in a variety of economic and trade policies. While many applauded his efforts to bring manufacturing jobs back to the United States, critics argued that these policies encouraged a kind of isolationism that strained America's relationships with some of its biggest trading partners. Now, why is this relevant for crypto investors? Well, in a globalized economy, where digital currencies allow money to move across borders in seconds, a sudden shift in trade policies or tariffs can create unexpected volatility. If Trump, or a leader with similar views, returns to power or heavily influences the policy conversation, these types of shockwaves could ripple through both traditional and crypto markets. The trade war with China, which escalated under Trump's presidency, is a perfect example. It wasn't just about steel or soybeans. Everything from consumer goods to high-tech components was involved. Whenever tariffs were announced or increased, investors worldwide became nervous. That nervousness led people in all sorts of markets, including crypto, to either rush in or pull back. As a result, we saw digital asset prices sometimes correlate with the ebb and flow of that trade conflict. People who believe in the long-term promise of crypto might see such turbulence as an opportunity to buy at lower prices, while more cautious investors could interpret sudden drops as a warning signal to stay away. But Trump's influence on crypto didn't stop with trade policy. Perhaps what he's best known for is his ability to move markets, sometimes with just a single tweet. Throughout his presidency, his tweets often caught the attention of analysts, economists, and everyday folks alike. Sometimes he would tweet about international diplomacy, other times about domestic policy, and occasionally about specific companies or industries. Nearly every major announcement seemed to cause some kind of market reaction. For crypto enthusiasts, the key moment came in July 2019, when Trump openly declared he was not a fan of Bitcoin or other cryptocurrencies, citing volatility and a perceived lack of real value. He warned that those investing in these assets should be prepared to lose everything. Although these comments might have been brushed aside by hardcore crypto believers who often say FUD, fear, uncertainty, and doubt is nothing new, the market still felt the impact. Prices reacted, at least for a short while, demonstrating just how sensitive crypto assets can be to statements by a public figure of Trump's stature. The real concern for many crypto investors wasn't so much that Trump disliked Bitcoin. It was that his administration might push for strict regulations that could stifle growth and innovation. Indeed, the Treasury Department under his watch proposed more detailed reporting requirements for transactions involving cryptocurrency, explaining that this was necessary to stop money laundering and terrorist financing. While few would argue that illegal activity should go unchecked, there's a delicate balance between necessary oversight and overregulation that limits creativity and progress. Excessive rules can push talented developers, entrepreneurs, and investors to more crypto-friendly jurisdictions. If a future administration, inspired by or aligned with Trump's approach, aggressively tightens regulations, that could pose a significant challenge to crypto's growth in the United States. But there's another side to the coin. Trump's policies aimed at reducing regulations for traditional industries might indirectly benefit the crypto world. Less red tape in finance can sometimes translate into a more open environment for fintech startups, including those working on blockchain and decentralized solutions. If large financial institutions become more agile thanks to deregulation, they might also be more willing to invest in or partner with crypto-focused ventures. So, it's not all doom and gloom for those who view Trump's influence through a crypto lens. Moreover, one of the surprising twists in Trump's presidency was his criticism of the Federal Reserve. By pushing the Fed to cut interest rates, he revealed a level of skepticism about the strength of the US dollar. Now, skeptics might argue that he simply wanted lower rates to boost economic growth and potentially help his political standing. However, whenever the dollar comes under scrutiny, no matter the reason, some portion of the public starts to look at alternative stores of value, including gold and, increasingly, digital assets like Bitcoin. This isn't a phenomenon unique to Trump. Any sign that the dollar might be weaker or less trusted can encourage people to diversify. But Trump's loud public spats with the Fed certainly brought more attention to questions about the stability of fiat currency. Moving away from Trump's personal views, let's consider a significant trend in the crypto world: decentralized finance, or DeFi. DeFi platforms operate on blockchain technology to provide financial services, lending, borrowing, trading, without relying on traditional banks or brokerages. Their popularity has exploded, capturing the imagination of tech-savvy investors who value transparency and control over their assets. How does this tie back to Trump, though? It boils down to the nature of decentralization. The more that politicians attempt to control or regulate traditional finance, the more some investors might seek out decentralized alternatives that operate globally. If a leader like Trump reintroduces stricter rules or continues to pressure financial institutions to follow specific guidelines, people may flock to DeFi precisely because it's harder for any single administration to shut it down or heavily restrict it. Conversely, if policymakers see DeFi as a direct challenge to centralized systems, they might implement new rules that make it harder to develop or access these services. That tension between political power and decentralized technology is something that investors and innovators alike watch very closely. Let's also talk about global perspectives. While the United States is a powerhouse in finance and technology, crypto doesn't adhere to national boundaries. Countries like China have already imposed harsh restrictions on mining and trading, while others, like El Salvador, have embraced Bitcoin as legal tender. In Europe, there's an ongoing debate about how best to regulate stablecoins and digital assets. Trump's approach to international relations often involved pulling back from multinational agreements and focusing on bilateral deals. If that kind of posture returns or persists, it may fracture global policy approaches to crypto. We could see an even wider range of rules, restrictions, and attitudes toward digital assets around the world, creating a more complex environment for anyone wanting to launch or invest in crypto projects. However, complexity isn't necessarily detrimental. From a forward-thinking perspective, if the US becomes too restrictive, entrepreneurs can pivot to other countries where the environment is friendlier to blockchain innovation. This already happens. Crypto companies often have teams in multiple locations, precisely to navigate regulatory challenges. A somewhat hostile US approach might slow adoption stateside, but it could simultaneously encourage rapid growth elsewhere. That would have its own implications for American investors, who might find themselves at a disadvantage if domestic regulations keep them away from new and potentially lucrative opportunities. Now, what about the psychological side of it all? Politics is deeply intertwined with public sentiment, and Trump is a master at capturing attention, positive or negative. Market confidence sometimes hinges on perceived stability. When people see the news filled with political drama, trade wars, or bold statements that catch everyone off guard, that sense of stability can waver. For traditional assets, that might mean a dip in stock prices or a slowdown in investments. For crypto, which is already viewed by many as high risk and volatile, the uncertainty can be even more pronounced. Some might argue it's the perfect environment for wild price swings that experienced traders can exploit. But for those hoping for a broader mainstream adoption, where grandma and grandpa feel comfortable putting a small portion of their savings into crypto, this kind of political circus can undermine trust. Let's not forget that Trump's influence remains potent even when he's not in office. Through various media channels, interviews, and public events, he continues to shape political discourse. If he endorses another candidate, that candidate might adopt some of his economic stances. If he runs for office again or gains a prominent platform, his opinions on crypto could resurface in a big way. Given that the crypto market is always scanning the horizon for any signs of supportive or restrictive policy, Trump's re-emergence in the political spotlight would undoubtedly reignite debates about whether governments should further regulate or even ban cryptocurrencies. Some experts also highlight a possible silver lining. Trump's overall unpredictability could be an X factor that accelerates the acceptance of crypto. Historically, if people feel uncertain about their government or lose confidence in traditional banking systems, they often look for alternatives. This is one reason Bitcoin was born in the aftermath of the 2008 financial crisis. A leader who constantly challenges or unsettles the status quo might inadvertently drive people to explore decentralized options. If Trump keeps criticizing the Federal Reserve, or if the dollar's stability is questioned, crypto can appear even more attractive as a hedge against conventional financial risks. We should be careful not to attribute too much power to any single figure, however. The crypto industry is influenced by a wide array of factors. Technological advancements, such as Ethereum upgrades or the development of new blockchain projects, can shift markets regardless of who's in the White House. Major companies like Tesla or PayPal might announce crypto adoption, sparking bullish waves. Regulatory bodies in Europe or Asia may pass laws that have a more direct impact on crypto markets than any tweet ever could. Trump is part of a larger puzzle, one piece among many that includes other world leaders, tech giants, central bankers, developers, and of course, the collective sentiment of millions of investors. For those of us who want to stay ahead in the crypto game, the best strategy remains the same regardless of Trump's leadership style or personal opinions. Stay informed, stay adaptable, and never invest more than you can afford to lose. Keep an eye on political shifts, yes, but also keep your attention on technological breakthroughs, new use cases, corporate adoption, and emerging trends like non-fungible tokens or NFTs and the metaverse. Crypto's potential extends far beyond the ups and downs caused by any political personality. It's an evolving ecosystem that's beginning to reshape how we think about money, ownership, and exchange on a global scale. In conclusion, as we weigh the question of whether Trump's leadership is beneficial or harmful for crypto investors, it becomes clear that there's no simple yes or no answer. His policies have, at times, rattled global markets, and his outspoken disapproval of Bitcoin once caused short-term price drops. On the other hand, his challenges to traditional monetary policy and his focus on deregulating certain industries may have indirectly provided a tailwind for crypto adoption. The final verdict will depend on how well we, as investors, can navigate the mix of political drama and fast-paced technological progress. From here on, I encourage you to approach crypto with a forward-thinking mindset. Political leaders will come and go, policies will shift, and markets will react. But crypto's underlying promise to offer a more transparent, decentralized, and efficient financial system remains compelling for many. If you believe in that promise, the day-to-day turbulence caused by a politician's tweet might look more like temporary noise than a permanent roadblock. But if your tolerance for risk is low, Trump's unpredictability could be one more factor prompting you to be extra cautious or limit your exposure to crypto assets. I'd love to hear your thoughts. Do you believe Trump's leadership style is ultimately a plus or a minus for the crypto market? Have you adjusted your own investment strategies because of his policies, statements, or the possibility that he might regain political power? Or do you see crypto as something that transcends politics altogether? Thank you so much for tuning in to this deep dive. Together, we've looked at economic policies, protectionism, trade wars, the power of tweets, regulation, DeFi, and the global nature of crypto markets, all through the lens of Trump's leadership. It's an exciting, sometimes nerve-wracking time to be a crypto investor, but staying informed and keeping a balanced view will help you navigate the ups and downs. If you want to learn more, be sure to check out my other videos where I discuss everything from Bitcoin fundamentals to the latest blockchain innovations shaping the future of finance.